Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, let me introduce myself. My name is Dia Ramadhani with student number 2341263 from the class Activity 238. In this video, I will discuss the mechanism of the capital market in Indonesia. The capital market or pasar modal plays an essential role in the country financial system as it connects parties who need long-term funding, such as companies and governments. With investors who have excess funds in Indonesia, the capital market operates under the supervision of the Otoritas Jasa Keuangan, and all trading activities are conducted of the Indonesia Stock Exchange, also known as Bursa Efek Indonesia. Understanding how the capital market mechanism works is crucial for investors, issuers, and regulators to ensure fair, efficient, and transparent transactions. The first stage of the capital market mechanism is called the primary market or pasar perdana. In this stage, securities such as stock or bonds are offered to the public for the first time through a process known as an initial public offering. The main goal of this market is to allow companies to obtain fresh capital directly from investors. Before conducting an IPO, the issuing company must submit a registration statement and prospectus to the OJK for review and approval. Once approved, the company works with underwriters, which are securities companies that help determine the offer price and sell the shares to the public. Transaction in the primary market occur between investor and the user, meaning the funds collected go directly to the company, not to other investor. After the securities have been sold in the primary market, they can be traded in the secondary market or pasar sekunder. In this market, investors buy and sell previously issued securities among themselves to the Indonesian Stock Exchange. The secondary market provides liquidity which allows investors to convert their investment into cash whenever they wish. Prices in this market are determined by supply and demand. When more people want to buy a stock, its price goes up, and where more people want to sell, the price goes down. All transactions are carried out electronically of the Jakarta Automated Trading System, which ensures transparency and efficiency. The trading process in the secondary market involves brokerage firms that act as intermediaries between buyers and sellers. The capital market mechanism in Indonesia also involves several important supporting institutions that maintain the integrity and efficiency of transaction. The first is the Otoritas Jasa Keuangan, which acts as the main regulator responsible for overseeing the activities of issuers, investors, and intermediaries to ensure fairness and investor protection. The second institution is the Indonesian Stock Exchange, which provides the platform where securities are listed and traded. The third is the Clearing Penjaminan Efek Indonesia, which acts as the clearing and guarantee institution to ensure that all transactions between buyer and seller are completed properly. Finally, the Custodian Central Efek Indonesia is responsible for the electronic recording, safekeeping, and transfer of sekuritas ownership. The collaboration of the institution ensures that the capital market system runs smoothly, transparently, and securely. The trading process in the secondary market begins when investors place buy or sell orders to a securitas company or a broker that is a member of the IDX. These orders are automatically matched to the JATS system, which matches buying and selling price in real time. Once the trade is execute, it moves to the clearing process managed by KPI and then to statement handled by KSI. The statement process in Indonesia follow at T+2 rule, meaning that the transfer of funds and securities are occur 2 business days after the transaction date. During this time, the buyer's account is debited, the seller receives the funds, and the ownership of securities is officially transparent. This process ensures that all transactions are safe, verified, and free from statement risk. The next category is derivative instrument, which derive their value from underlying assets such as stock, bonds, or indices. Common types of derivative Indonesia include warrants, right issue, and stock option. A warrant gives the holder the right to buy a share at a certain price within a specific period, while a right issue allows existing shareholder to purchase additional shares before they are offered to the public. Derivatives are considered high-risk instruments often used for speculation or hedging. Indonesia also has a rapidly growing Islamic capital market, which offers Sharia-compliant instruments such as sukuk and Sharia mutual fund. Sukuk are similar to bonds but structured according to Islamic law, which prohibit interest of paying fixed interest. A sukuk provide return based on profit sharing or asset ownership. The development of the Sharia capital market aligns with Indonesia's role as one of the world's largest Muslim majority countries, offering ethical and faith-based investment alternatives. That concludes my explanation. Thank you. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.